Hello, everyone. This is Kathy Fagan, annuity specialist here at Art Jetter & Company. Thank you for joining us on this highly anticipated presentation by North American. Today, we'll be talking about positioning fixed index annuities in today's market, and we're joined today by Cody Lodermeier, internal wholesaler with North American. Before I turn it over to Cody, I just want to mention that if you have any questions throughout the presentation, you may type them in the chat box on your screen. All questions will be answered at the end of the presentation. Without further delay, here's Cody.
Thank you, Kathy. I appreciate the warm introduction. And of course, if anybody does have any questions, don't hesitate to use that chat function, as I'd love to make sure we get all the questions answered in regards to why fixed index annuities, why traditional fixed annuities, or commonly known as multi-year guaranteed annuities. We're really going to be talking about how to position from CDs to MYGAs, MYGAs to fixed indexed annuities, and then also maybe why, where they fit, some common objections that you're going to see when going from a multi-year guaranteed annuity to a fixed indexed annuity, and then also some prospecting information and ideas of where to look for potential clients or the markets that you can potentially tap into. To jump into the presentation here, I want to show a 20-year look back at the S&P 500 because I want to cement in why it's so important for a fixed indexed annuity within the financial market space. And that's really going to be the beautiful part of the annual reset, being able to lock in your current value in a given year and knowing in the subsequent years that it's not going to decrease due to negative market performance. Taking just a quick glance at the 20-year in review on the S&P 500 here, you can see that in 2000 and then all the way then to 2008, there were no gains in the S&P. Yes, it did have a drop down to 2003 and it increased from there. However, if your client was in the market at that point, they were going to see a neutral growth. And then obviously since 2009, we've been on pretty high of a bull run. At the beginning of 2019, we did have a roughly 16 to 17% drop that is actually corrected. Well, it's not often that the market gives your clients an opportunity or a second opportunity to lock in their funds into a safe money vehicle, and it's definitely going to be a great time to look at fixed indexed annuities. Make sure that their gains are locked in, because if you do start to lose those gains, it can definitely have a big impact on your retirement portfolio. We did a little bit of research into bear markets here at North American, and this is every bear market that we have had in the S&P 500 in the last 100 years. You can see there's been quite a few of them. Well, there's some statistics right in the middle of your screen that I really want to mention because I need them to sink in. A bear market has occurred approximately every 5 years. So that being said, we tend to look at things in a very cyclical manner. We've been on a bull run for 10 years now. The average decline in a bear market is 39%. Well, a 39% decline in a year is going to take about a 48% positive return in the year following just to break even. Average duration of a bear market being 1.5 years. And the average time to break even from one of those bear markets is 5.2 years. So I don't know about you, but most individuals that I've spoke to going into retirement don't have time to wait 5.2 years just to break even on their money if there happens to be a downturn in the market. So locking in some of the gains that they've been able to receive over the last 10 years can definitely be a great aspect to look at. And fixed indexed annuities are really going to fit into the fold in multiple different ways. I like to show this here because it really highlights the very bottom line of fixed index annuities and how they're going to cover everything from safety of your premium to tax deferral to the option of guaranteed lifetime income. Even if you choose a product with an income rider or without one, there's always that annuitization on the back end if needed. And then additionally, the growth potential is also going to be there. Now, as you look at that, I would prefer to highlight this. Here you're going to see the main traditional avenues that an individual will invest their funds in with a money manager. You can see where the principal protection line in purple is right in the middle, and and how fixed indexed annuities and traditional fixed annuities are going to be right below that line. So what does that mean? It means that a fixed index annuity and traditional fixed annuities, yes, they're both going to be principal protected. However, they're going to give more upside potential compared to the CDs or a money market or just sitting in cash. So with that being said, we've looked at the S&P 500. We've seen that we've been on a 10-year bull run. We've looked at the bear markets flyer that shows a bear market happens approximately once every 5 years, lasts for roughly 1.5 years, and it has a break-even point of 5.2 years. So if we could just get rid of that out of the conversation entirely, that'd be fantastic. And you can really do that with leveraging a fixed indexed annuity. Now, there are going to be multiple different swim lanes that a fixed indexed annuity is going to fit into in our market space. And traditionally, you're going to see the income accumulation. You're going to see more of the multi-benefit entering the market over the next couple of years. And then also where North American is really shining lately is the liquidity story. Why is liquidity important? That's generally one of the main objections of a fixed indexed annuity. So I've always heard hey, I'm going into retirement. I understand that fixed indexed annuity is a retirement vehicle. However, you're going to lock up my money. It's not going to be liquid. That's generally one of the common objections that I hear, and we'll also touch base on a few others in the future. But really having that liquidity swim lane is going to be a huge benefit to your clients. So let's talk about one of the second biggest objections that I hear in regards to a fixed index annuity compared to a multi-year guaranteed annuity. One of those objections is the potential for a zero return in a given year. I've spoken with many agents who sell multi-year guaranteed annuities on a regular basis. They're hesitant to dip into a fixed index annuity because they don't want to have that discussion of a zero return in a given year with one of their clients. They feel more comfortable where they're going to see a return every year moving forward, even if that return is going to be slightly reduced. Well, North American did a study of over 17,000 contracts that we already have on the books, and we looked at 5 different crediting strategies. You can see the average credited interest rate, and then also the percent of chance where a zero played out. So on a monthly point-to-point on the S&P 500, the very bottom option there, that had a 60% chance of a 0% return in a given year. Well, I think I know, just as everybody else knows on this call, that no one index is going to do perfect in every market condition. So by using the advantages of bucketing that a fixed index annuity is going to offer and have, it's going to help reduce the chance of receiving a zero and also help smooth out those returns overall. If you happen to take a look, you're going to see percent of chance where you receive a zero in those given 5 of 33%, 19, 6.7, 33% again, and then 60.01. I don't know anybody who 33% of the time wants to explain a zero to their client. I certainly don't. I would never want to. That's why we definitely like to show the benefits of bucketing. We decided to take those same, divide it out in equal fourths, and we did 2 additional studies. And what we found was you're going to average out your returns. I mean, purely clinch the diversification story that we've always been told. But then the chance of receiving a zero in a given year gets greatly reduced down to a 4 to 5% chance in any given year. So that's roughly, 1 in 20 that you're going to have to explain a zero compared to 1 in 3. I think that's a much easier story, especially if you level set up front that, hey, there are going to be some years that you might not see a return, but that's the beautiful part of a fixed indexed annuity, having zero be your hero. So now that we've talked about kind of why we should look at fixed indexed annuities, some of the common objections that individuals have had and how you can get around those objections, let's talk about the retirement paycheck. The number one goal in retirement, generally, to not run out of money and have the best time possible. So it may be important to leverage fixed indexed annuities that you have to offer due to the 3-legged stool that could turn into the 1-legged stool. Traditionally, pensions, consumer savings, and Social Security were able to roll individuals all the way through their retirement. Well, with pensions slowly decreasing, Social Security being up in the air, you're really going to need to rely on the consumer savings. Well, just by relying on consumer savings, you can leverage a fixed indexed annuity in regards to a lifetime income stream or a product that has an activity of daily living based liquidity feature or enhanced payout, something that's going to help cover some of the options or items that a pension or the Social Security income would have previously covered in the past. So by leveraging their savings account into a fixed indexed annuity that offers multiple different financial objectives, kind of like that multi-benefit, the liquidity, the income, or just the straight cash accumulation that I'd shown earlier, you can really lean on that one-legged stool. Now, quick quiz. How many Fortune 500 companies offer a defined benefit plan? Any idea? It's roughly 16% in 2018 offered a defined benefit plan. Now, what about how many or what percentage of individuals in the U.S. don't have a workplace retirement fund, either not offered to them or that they're not taking advantage of? That's roughly 46%. So if we go back to that three-legged stool that I'd previously mentioned, being pensions, consumer savings, and Social Security, well, 46% roughly are not saving for their retirement, with pensions being up in the air as being a reduced benefit from multiple different companies across our great nation here, and also Social Security never being guaranteed and the potential to be reduced. We actually have done some studies in regards to Social Security where by the time of 2035, they are suggesting a reduction in benefits or a potential reduction in benefits. Now, that can definitely be a huge impactful story when your client has no legs to their stool because they haven't been saving, their company doesn't offer a pension plan, and their Social Security benefit was reduced. So really leveraging a fixed indexed annuity that has a $2,000 qualified minimum, using flexible premiums to start their retirement savings, that's just one simple way to use a fixed indexed annuity. So kind of like what I just previously stated, North American offers a product called our Performance Choice Series that is a fixed indexed annuity on a basic accumulation chassis that has a $2,000 qualified minimum to help your clients get started in their retirement journey and to start earning those gains every year with locking in their principal on the principal protection aspect of it. Now, the fantastic part of a fixed indexed annuity that it doesn't just help with the first sale. Like, okay, I put my client into a fixed indexed annuity and now their funds are going to be locked up there. They're never going to have access to those. If something happens, I'm not going to see that in the future. It's never going to be back under my assets under management. And that's not necessarily true because most annuity carriers will pay out an inherited IRA to, well, I guess not a spouse. They could spousally continue, but maybe a child can inherit their parents' IRA and be able to spread out that taxation in a fixed indexed annuity, turning that one sale into two. Now, I didn't create a slide for this, but North American does also offer non-qualified stretch accounts, which are going to be a unique benefit to annuities. We do allow a non-qualified annuity that has a death claim to be stretched very similar to an inherited IRA into a new annuity contract that would help them stretch out that taxation so they don't have that big lump sum up front, which essentially is a second sale for you as well. Now, we do have multiple different products available. I'm not necessarily going to dive into the products that North American has. I'm just more talking conceptually of why a fixed indexed annuity, how they can benefit you and your clients long term. So when we're talking about a pre-retiree and the different opportunities that we're going to have with those, you're going to have legacy and generational planning. Well, perfect. You can leverage one of North American's legacy portraits for the generational planning. We've actually created a value add program that helps get your clients' beneficiaries in the door to do that estate plan. One simple question to ask is, do you know the difference of a per capita or per stirpes beneficiary death benefit? Most individuals have no idea or have never heard of that. Well, one is essentially going to be a bloodline beneficiary, and the other one would spread out the funds if one of the beneficiaries were to pass away. So by just asking those questions, you can really show that they don't have a full understanding of how their beneficiaries and the generational plan is set up. And that's where you can really leverage in those non-qualified stretch and the inherited IRA conversations to not just help your current client, but also help their children as well in the future when that sale comes. Appropriate retirement strategy. Now, I fully understand that you can't put all of your clients' funds into a fixed indexed annuity, but the nice part is fixed index annuities are so flexible that you can use them in so many different ways, such as locking in your money. And if there is a correction, if you want to start allocating back to your AUM or assets under management, putting those funds back into the market after the correction, that's absolutely feasible with some of the products that North American has to offer and the enhanced penalty-free withdrawals that we have. We actually have multiple different products that allow you to fully deplete the account by the end of the surrender period. Penalty-free distributions. You don't necessarily need to leverage all the income riders that are out there in the industry on a fixed indexed annuity. You can really use the penalty-free distributions or penalty-free withdrawals on a policy to create that customizable income for your client during their retirement years. Now, we do also have, kind of jumping down to the bottom couple, your maximize your qualified retirement savings. Well, a lot of individuals don't know that you do have to take required minimum distributions out of those qualified retirement savings. North American, again, has another value add program called the RMD Play, and it is really designed to help minimize or maximize the impact that your required minimum distributions have. Because everybody has to take them. However, it all depends on how you take them and what you do with those funds to really leverage those benefits. If you're wanting to minimize the impact of your RMD, we have solutions. If you're looking to maximize the impact of the RMD in regards to a death benefit to your heirs, that's definitely feasible with a North American annuity. And even Social Security meeting or events. Well, Social Security is a huge part in retirement, and you can use a fixed indexed annuity to bridge the retirement gap from retiring at maybe age 60, but they don't want to start their Social Security till age 67 or 70 to really maximize that benefit. They can use a income rider or a traditional fixed annuity to get them over that hump in the retirement years. We actually recently created some flyers called the Go Retirement. Talks about how individuals who enter retirement typically need access to more of their funds initially, and then it slowly depletes as they become a little bit aged and they're going to be traveling and being a little less active in retirement. So there's definitely multiple different ways to look at fixed index annuities besides just an income stream or an accumulation play or locking up my client's funds. There's definitely flexibility in the marketplace that we all need to be able to utilize and move past. North American took some of the top 4 objections and then also went over some of the items in those objections and how you can work around those for a fixed indexed annuity. Like, as I previously mentioned, a FIA owner premium, you're locking up my money and it's not accessible. False. North American really prides themselves on liquidity-based products. If anybody has questions, Art Jetter would be more than happy to answer questions in regards to the liquidity-based products that we have, or you can always call into our sales desk and our experienced sales team can go over that with you. FIAs are for only risk-averse or conservative savers. False. I consider it for the savvy investor. Right now, we've been on a 10-year bull run. Just because you're a conservative saver doesn't mean it's not the best play. Putting those funds into a fixed index annuity to lock in those gains that you've got over the last 10 years can definitely be a great aspect. And then using the enhanced penalty-free withdrawals or essentially the penalty-free withdrawals in general to reallocate back to the assets under management, as I had previously mentioned. FIAs have little to no growth. Well, based on the annual reset of a fixed indexed annuity, North American can actually show where one of our fixed indexed annuities with an annual reset and locking in feature from actually 2006 outperformed the S&P 500 just due to the fact of we didn't have those downturns in the market because your clients had zero as your hero. So kind of speaking as zero is your hero, let's talk about how fixed indexed annuities work. In an up market, you kind of see how the purple line is going to be slightly above a fixed index annuity. Well, that's what you're giving up by purchasing the fixed index annuity. You're going to give up a little bit of those gains on the top side to have that downside protection. And that really illustrates when you look one slide or one little column to the right there, where you have a zero floor on your fixed index annuity, even when the market is neutral or negative. You're not having to have that difficult conversation with your client. You can say, hey, guess what? Great news. If we would have left your funds in this account, they would have been negative 22% this year. But because the fixed indexed annuity, you're sitting at zero. Well, one of the objections that I hear is, I don't want to receive zero. Great agents are able to give me a positive return even in down markets. And North American has product offerings that can do that exact thing as well. It's called an inverse performance trigger, or you might have heard them as an inverse edge trigger. That instead of having to allocate to a fixed account when you think that the S&P or the markets will be neutral or negative in a given year, we actually have inverse performance triggers, meaning if the S&P is neutral or negative, your client would receive a positive return. In this example, you see if the market was up 10%, your client would have received a zero return. That's because this is an inverse performance trigger allocation. If the market was 0, -10, -20, really anything negative, your client is going to get a straight 4% rate. That's a declared rate. So those individuals that speak with, fixed index annuities can only earn in an up market, that's also a common objection that we're overcoming on a daily basis here at North American, because we are going to be one of the only carriers in the industry that does offer positive index credits in negative markets. So as I previously mentioned, these are going to be the multiple different swim lanes that fixed index annuities can solve. I'd like to talk a little bit more in regards to the income aspect to help replace some of those pensions that are going to be lost, or maybe Social Security income that isn't going to be there in the future. And there's really two different ways to look at income with a fixed indexed annuity. One of those ways is a guaranteed income. Well, guarantees generally have, as it says, a higher guaranteed income in the future. However, if there is any positive market performance above what you were guaranteed at the time you purchase your annuity, you're not going to see those. You're going to know that exact dollar amount in the future that you need. And traditionally, those products do come with a fee associated with them. So if you're not looking for a lifetime income stream that's guaranteed, you might want to look at the participating income, which is really where North American is shining right now, is participating income. We do have multiple different products that, based on market performance, will increase the income account value and provide your clients with a lifetime income stream, meaning they can never outlive it as long as they don't take additional withdrawals on top of it. And additionally, you can solve for multiple other benefits depending on the type of income rider that you look at, because they do have other benefits built into them, like a nursing home multiplier if your client gets confined to a nursing home facility for a certain amount of time, or a activity, a daily living based multiplier, basically stating if they can't perform 2 of 6 activities of daily living, they would double the income for a certain amount of time. Generally, that is for up to 5 years, and that is what it is here at North American. We also have a level or increasing option available on many different income riders, meaning when your client starts their income stream, they get the option. They get to choose, do I want a level payout at $20,000 a year for the rest of my life? Or do I want to start maybe at 17,000 but have that opportunity to grow and be able to keep up with inflation as the time moves on? Now, we do have multiple different products that have a guaranteed increase every year. We also have ones that are going to be based off of market performance, meaning the better the market performs, the higher your payment is going to increase in the following year. And the beautiful part is once that payment increases, it's now locked in at that level. It's never going to go below that in the future. So there's multiple different options that I had mentioned. They do kind of go a little bit all over the board in regards to guarantees versus participating, but that's really where you dive down into your client's financial situation and see what's going to be best for that individual client and their current situation. Now, I wouldn't be doing any justice to North American if I didn't mention our 3 A+ ratings. We are A+ rated with AM Best, S&P Global, and Fitch. We are going to be one of the only, actually the only insurance carrier or FIA carrier that is employee owned, meaning we're actually owned by a trust, an ESOP program. We don't have those short-term gains that we have to put out every year to make our stockholders happy. We're able to look at that long-term vision to make sure that we're going to be around for the long haul for your clients so that their lifetime income streams are truly guaranteed for life. Now, North American has created a marketing platform that I'm going to be able to provide to our jetter that would allow them to customize our material with your guys' contact information if needed. Now, of course, your broker-dealer may have different rules and regulations if that's the space that you do play in, and always abide by theirs. However, just knowing that North American has created multiple different marketing pieces that you're going to have available can definitely be a great aspect, and also a free marketing tool to yourself that doesn't cost anything. One of those examples is a flyer that we recently created illustrating the benefits of a CD or certificate of deposit versus a multi-year guaranteed annuity. As I'm showing here, this is just one example of the type of flyers that you're able to put your contact information. Instead of saying to learn more and get further product details, contact your financial professional, it can say contact your financial professional, Joe Smith at, and your phone number. So we're really excited about that platform, really looking forward to utilizing it, leveraging it. Let me hop back over here to the presentation. I do want to kick this back over to Kathy so she can wrap it up for us. And I will get their phone number on the screen for everybody so that you have that available. Kathy, did you see any questions come through on the chat feature?
Yes, we had one question wondering if any of these slides are available as standalone pieces. So early on, you spoke about the bear markets, and I think it was at the beginning of your presentation was when the questions came out. So like slide number 2, are your retirement assets prepared for the next market downturn? And then the following slide regarding bear markets. Or really any of the slides that you had in your presentation. Are they available standalone via your website? Is that something that I would be able to download and share with the agents?
Fine. Most of the items that I showed today are available in marketing pieces. I actually took almost everything out of a marketing piece that you saw in this presentation. So if you'd like to leverage these materials, don't hesitate to reach out to our sales support team, and we'd be able to assist with getting those out to any individual that needs them and potentially customizing them for you.
All right, Cody. Thank you so much for your time today, as well as everyone who joined us for our webinar. If you're still able to hear this presentation, we encourage all of you to start thinking about people who are a fit for the solutions that we discussed today. We're standing by if there are any additional questions or for any additional training or illustration support that you might need. Please call us at 800-228-0008. Again, thank you all for attending, and enjoy the rest of your day.